To build anything that truly lasts, it takes time.
Welcome back to First Trades right here on ET Now, and let's talk about Persistent Systems. The company did come out with its earnings not taken very well by the markets as the stock has tanked almost 8%. But what's the way forward? Let's try to decode that with Mr. Sandeep Kalra, who is the CEO of Persistent Systems, joining us on the show right now. Hi Sandeep, morning. Good to be speaking with you. And firstly, given the global headwinds, it's been a decent quarter for the company, but help us understand that what segments led to this kind of a growth, and was there any pressure that you have witnessed or experienced with respect to your healthcare segment specifically? Any reasons that you wish to flag off?
For Q1 26, we delivered a revenue of 389.7 million. This is a growth of 3.9% sequential quarterly and 18.8% on the year. In rupee terms, this comes to 21.8% on the year. Now, in terms of the industry verticals where we grew, so industry vertical growth was led by our financial services segment, followed by software high tech and healthcare life sciences. On a year-on-year basis, these three verticals grew by 30.7%, 14%, and 12.4% respectively. Now, if you look at your question on healthcare life sciences, our healthcare life sciences vertical had grown sequentially for the last 6 quarters at a very, very rapid clip. And as a part of some of our larger deals, there is a certain amount of offshoring that had to be done at a point in time. So that is the reason for the slight decline. And we are confident at the end of the year, if you were to look at all the three verticals, BFSI will grow the fastest, high tech next, and healthcare will also grow if you look at a year-on-year comparison at the end of the year.
Right, Mr. Kalra, we understand that Persistent is not much impacted by discretionary spending. But does that change given the tariff uncertainties we're seeing and global issues? Are you seeing any pressure from clients related to the discretionary spending, perhaps any delays in client decision making? Is that something you're seeing?
Yeah, so if we were to look at the overall global macroeconomic conditions, there's a macroeconomic condition, there's a geopolitical thing that happened in the last, let's say, 1 to 2 quarters. The tariff discussions that have been ongoing in the US with various countries, there are business leaders who are wanting to see where does that land, because a number of our customers, if for example you're in the banking financial services, there's a certain impact of the interest rate cuts, that discussion that we have. If you're looking at the capex spending in the healthcare sector, if they have to pull back the supply chains from China or other places into the US, so there are many implications of all of this. So there is a certain amount of slowness in decision making because business leaders really want to understand where all this is going. And over the next 1 to 2 quarters, hopefully all of this settles. How does that impact us? Number one, if the decision making is slow, we need a little more pipeline to be able to convert into bookings and hence into revenues as we go along. That is the implication. And from our perspective, in our discussions with our customers, the entire hope is in the next 1 to 2 quarters, a number of these things will settle down and hopefully the market improves thereafter. But in spite of that, we have delivered fairly well and we are confident of delivering a good trajectory going ahead.
Indeed, but Sandeep, for the first time in the last 5 quarters, North America business revenue has come below 80%. Is it because of the healthcare segment only, or is there more of it that could be in offing? And can we expect it to grow in the upcoming quarters? Any rebound that you are penciling in?
Yeah, so if you look at the entire company, so North America versus Europe versus India versus rest of the world. North America grew 17.4% year on year in US dollar terms. Europe grew on a smaller base by 37.5%. And India grew by about 18.3%. Rest is very small, so I'll leave that. But if you look at the overall company, even North America growing at 17.4%, it is at the top end of the industry. So I am not worried, and it's a good thing. And we have said it many times over. We want to balance our geographic mix in terms of revenues. As we go along, someday in the next 2 3 years, we want to be at 15% in Europe, 10% to 12% in the rest of the world. So that means US has to come to 74 75%, And that will be a combination of both organic and inorganic. So it's not for the lack of focus, but we want to focus more to rebalance organically and inorganically in Europe. And so it's a good thing for us.
Okay, and Mr. Kalra, let's throw some light on your EBIT margins because they're almost flat on a sequential basis at 15.5 that level. Are we seeing some pricing pressure to win the deals? Is there any cross-currency headwinds that has impacted your margins this time around, and any outlook on margins ahead?
Yeah, so if you look at the last quarter to this quarter, obviously, the US dollar to rupee movement, and if 80% of our revenues are coming from there, there's an impact there. But look, at a bigger picture level, if you were to look at it, these are things that will happen. Sometimes the rupee will go up, sometimes the rupee will go down, dollar, whatever it is, right? If you look at our overall business, we delivered 15.5% in EBIT terms. In PAT terms, we even delivered better than the last quarter last year. So from a operational perspective, we are working better. All these things about rupee, dollar, and minor things here there will keep happening. If you look at the full year last year, it was 14.7% from an EBIT perspective. Current quarter is 15.5%, and we will try to do better through the year. So overall, the story at Persistent is about consistency of revenue growth, consistency of profit, which is equal or better, and becoming more relevant through our capability build in the upcoming areas like AI, cloud, etc. Any which ways we were good. So that's the entire thing if I was to summarize for you.
Okay, thanks for that quick summary. But Mr. Kalra, the company has said that it will achieve a 200 to 300 bips margin improvement in the coming years. Are you going to be reaffirming this guidance?
So first of all, just to correct, we don't give forward-looking guidance. We have always said aspirationally we want to be a $2 billion company in the next 2 years by the time FY27. By the time we reach there, we want to improve our margins by 200 to 300 basis points. So now that is our aspiration. Now let's see where we are tracking with respect to that aspiration. As I said, in the last year, we were at 14.7% from an EBIT perspective. The Q1 has delivered 15.5%. If we do slightly better than this through the year, the chances are we would have delivered 100 basis points improvement over the last year. And if we can do better, we will try to do better. So overall, if you look at it, we are in line with what we have been saying we want to deliver aspirationally. And if you look at even historically, we said we wanted to be a billion-dollar company when we were 600 million. We delivered that. We started saying we want to be a $2 billion company aspirationally by 27. We are on the path to deliver that. Between now and then, we need a 19% CAGR, compounded annual growth rate. Current growth rate is 18.8%. And as I said before, it'll be a combination of organic, inorganic growth. So we stick to our aspirations and we'll try to deliver to that.
All right, Mr. Kalra. And lastly, let's talk about your headcount. This quarter, roughly 750 employees were added, which is around a 3% increment sequentially. What are the plans related to hiring going ahead? And the company has also deferred wage hike for a quarter. Could you help us understand why this is happening and could this change in quarter two?
Few things. First, if we talk about the wage hike, yes, we are committed to doing the wage hike in the next quarter. And the reason we deferred it is there's a certain amount of uncertainty in the market. At the same time, we are investing big time into AI, whether it's training our employees, and that's our investment into our employees, whether it is building platforms, whether it is partnering with the hyperscalers like Microsoft, Amazon, Google, IBM, Salesforce, and other technology players, and so on. So there's a lot of investment going in to make sure we are at the top end of technology capabilities. We are very relevant to our customers. We have the growth to fuel our career aspirations of our employees and basically run like a very good company at the top end of the pyramid. Now, having said that, if we are able to do better than our goals are for the year, we will even go back. Whatever different deferment we have done, we will take care of that. And by the way, for the record, for the last several years, many times there were the points where industry had deferred the salary increase for many quarters and we had stuck to it. So rest assured, our employees are our best assets and we'll take care of them.
Sure, Mr. Kalra, that sounds optimistic. Thanks so much for joining.